Hello, ladies and gentlemen, and welcome to another episode of Mark Isaac Potter Presents. We're visiting today with Geordan Waldman, who's been on the show at least once before. And as I said to Jordan, I am having big time problems with the computer today, but we'll try to soldier on, so to speak. What would you like to tell us today about your business or yourself, Jordan?
Oh,
I
that
know
is a
you're highly accomplished. I remember that from your last video. I think you've got 12 PhDs and you
I
work
don't
for
nearly have
President
that many, but
you
maybe
worked
one
for
day.
President Carter. You know I try to make jokes.
Yeah,
Tell
keeps it
tell
light.
us tell us what you want to tell us today. You want to tell us about certain aspect of your business, or what would you like to share?
Sure, we can talk a little bit about, well, one thing we could talk about, some basics of budgeting. We could talk about the four buckets method of budgeting.
Oh, nice. Okay, that's beautiful for you to share.
Sure.
So the four, and I'm from the country, so I know what a bucket is.
Yep, and one of those things holds water usually. Um,
Yeah, as I handle, right? Oh,
so, yeah, some basics of budgeting. Really, people should set their lives up around four basic buckets.
okay.
Whether they mean to or not, you've got typically your checking account, so basically 30 days worth of your day-to-day finance. Then you have a savings account, which should be a specific amount of time and safety net.
I'm going to take notes if that's okay too. I know
Yeah,
that
go
I'll have
for it.
this recording, but okay. So a safety net, your monthly budget, monthly.
Yep, so
Okay.
you got your checking account, which is your 30-day window of daily daily
Right.
expenses. Then you
Right.
have your safety net bucket, which is usually about 90 to 180 days of savings. So that's
Okay.
in case of an emergency. You've got that safety net that's for unexpected expenses. That's for if you lose your job, you've got that buffer window. And then
Right.
there should be an investment bucket.
Okay.
And so anything past that safety net, you should be trying to make your money work for you. So it should go into some safety valve account, whether that's insurance, that could be into the stock market. There's a variety of ways you can invest that money, and plenty of people who can tell you how to manage those monies. Um,
There's plenty of people out there that have
yeah,
ideas about how you should invest your money.
and
Absolutely.
it's just up to you on, the risk factors you want to be considering, how conservative you are in that risk. Um, and so other things you might want to consider on that risk is how liquid that money is. So if you put it in like a CD or something, just know you can't access that money for a certain amount of time. Or if you're putting it in a Roth IRA, you can't access that money for a while. And so there's pros and cons to that. A
There,
pro is that that money is going to grow for a variety of time. But if you pull it out early because you need it, there's tax penalties that occur because of that.
right, but it would be smart to do a little of both, right?
It is wise to invest in a variety of strategies, some like
Uh,
an insurance vehicle, like an IUL, for instance. The benefit
right.
of that is you get the insurance policy, you can get some living benefits, and it'll grow at a specific amount. And then there's a floor if the stock market goes down. You don't see any decrease in
As
the
much,
growth
yeah,
that you've
yeah.
built. So there's pros and
Okay.
cons to that. Um, Definitely talk with advisors on that front. And then the final bucket is your debt bucket. So you have
Hmm.
things like your mortgage, your credit card bills, and car payments, maybe student loans. But those are the four buckets of where your cash flow goes month to month, year to year through the course of your life.
Okay, now for the how do we, the biggest thing in my heart about this is how do we educate people or get people to do this or think that way I mean, when I'm a one or two generations older than you. We never talked about money. We kids at our house didn't get an allowance. So I've never, I mean, I've had all those things. I've had investments, I've had a mortgage, but I've never planned it that way. And how do we change the physiology of humans to the point where people know that? Because if I were young again now, I would know enough, hopefully, to do that, even though, money was tight and all that. What can we do to make the world a better place financially?
That is a tough question because it goes back to education and priority of education. I'd say most people do not get the basics of financial literacy because
Right.
it's expected to be taught by your parents. But if your
Who
parents don't
who
know it,
don't? Yeah.
then it's hard to pass that knowledge on or even get to a point where they're making better decisions, which can then help their kids. Luckily, with the internet and there are plenty of companies out there that will kind of give you that basis of financial literacy that you can start learning those basics, but um, to find that information can be challenging. It can certainly be hard in many ways to find a way to parse out whether that information is correct or accurate. So really, I'd recommend if you're going to be starting on the journey of financial literacy to learn a few key topics.
Okay.
Budgeting, the
All
basics of
right.
budgeting,
Okay.
and then you want to understand the topic. It's a little bit more complex, so an intermediate topic after you learn the basics of budgeting and cash flow. You want to learn about compound interest.
Oh, okay.
So compound interest is really where the game of money is played. Compound interest is what makes your credit card bills so expensive
Because
and makes
yeah,
and makes your investments so lucrative over time.
right. Because
And
the money that came in from interest last month is now part of the quote unquote principal and gets applied to the next interest, so to speak.
yeah, so
Let's
it
say.
grows on itself over time, both without you
Yeah,
doing anything, but if you keep contributing to it, it increases more and more over time. And so it
right.
can grow almost exponentially as it
Yeah,
actually exponentially as it keeps building on itself.
right,
And really, once you understand compounding interest, you want to start getting into those investments as soon as possible because the longer you wait,
right.
the more money you're missing out on because of a concept called the last double.
Yeah.
And the last double is basically over a period of
Gig
time.
Gigantic. Yeah.
Yeah, if say you have $1 million invested over a period of time, you wait another 7 years, that money's now worth $2 million.
Right,
But if you had waited those 7 years to get into that investment, your investment account's only worth $1 million
right,
because you missed out on an extra compound of doubling your interest.
right. Yeah, there's that example of the internet where something like you get a penny. You've heard this one, I'm sure. You get a penny, and then if you double the penny by the end of the month, you have some outrageously high amount of money. It's really quite surprising.
Yeah, it can
So
build
I
on itself fast.
yeah, so I seem to be wanting to ask you philosophical questions instead of practical ones about your business.
I'm a philosopher too, so
Uh,
go
okay,
ahead.
so in a world like this, that where people are not educated, where education itself is under attack, frankly, in my opinion, uh, there's people out there who want to help people mostly because they're going to get paid to do it. But how do we can we improve the way we send the information out? Is there a big trade association for financial advisors that can do a better job of pushing the whole notion of, you know, get if you're 20 and you're just married, for God, we should have an ad, for God's sakes, learn about budgeting, learn about compound interest, go find some stuff, do it now. Nobody said that to me and my wife when we were young, and nobody said it until really, I guess, until I started doing these TV shows. I mean, we did invest a little bit. I think but it went away in medical very fast, what little bit we had put away. So,
Well, it reminds me of something I saw recently. I can't remember which Scandinavian company. I think it was Norway.
okay,
Um, but once their population hits the age of 18 or adulthood, they
right.
get a booklet that has some of the basics of what being an adult is like. So it gives you some basic medical information. It gives you some basic information on how to cook, how to budget, how to take out a loan, and the pros and cons
Okay.
of that. I think the U.S. could benefit from something similar where
Yeah. No,
giving
absolutely.
people the basic tools to
Yeah.
be able to manage their adult lives and might go a
That's
long way in
yeah.
helping people get into a better situation for
That's
themselves.
so true. That's so true. Now, before I'm probably going to do a short show today because of my blankety blank computer, but give us some contact information for you and tell us just a little bit about your business in case people want to contact you. We, I don't want to characterize you. I'll let you characterize yourself and give us some contact information if you would.
Sure. If somebody wants to reach out to me, they can call or text me at 805 368 3477. Again, that's 805 368 3477. Or you can
Okay.
email me at gwaldman, Waldman, at Geneva Phi, GenevaFi.com.
Very nice. Very nice. Okay. And what would you say are the products and services that your company provide?
So with Geneva Financial, we are a mortgage bank in 49 of the 50 states. Only state
Okay.
we are not in is New York,
Okay.
but we have every kind of mortgage product you might possibly need, whether that is conventional loans, government loans, HELOCs. We have hedge fund money. We have money for investors for wanting to do fix and flips or fix and holds. And we have
Okay.
commercial lending. But what makes me unique in this area is rather than just being a mortgage banker, I'm a certified liability advisor. So the
Okay.
way I look at your finances is different than a standard loan officer. I help you free up cash flow so you have more money at the end of your month. I help you get into long-term strategies so you can accelerate the payoff of your mortgage, you can get out of debt faster, and you can get into more of that wealth building sooner.
You are wise. I'm so honored to have you on the show. I just I want to say something really stupid, but I'm from Ohio, so I'm probably allowed to do that. You're one of the smartest people I've had on the show, and we've done about 500 shows. So I
Well,
just
I
and
appreciate the
you
invite.
you're combining wisdom with compassion, which is more common nowadays, but still quite uncommon. So thank you for being on the show.
Appreciate your
We
time.
care about you very much. Thanks for taking the time. And folks, if I were newly married or even, in my 30s having the first kid, I would call Jordan seriously and just say, please help. Put up your hands or something raise a white flag, maybe. Thanks again for your time, Jordan.
Thank you.
All right. God bless. Talk to you soon, man. All right, I'm gonna log this thing out if I can figure it out here. Oh, okay. You might want to exit on your end. My side's doing something weird. I don't know what. So,
All right, sounds good.
all
Thanks
right.
again,
Thanks,
Mark.
boss. Take care, please.
You too. Bye.
All right. Bye-bye. Oh, I see. Okay.